Stock market is crashing, down 15% plus. Wait until you see the comparison with 1929 and 2008. Stay tuned. Welcome, Wealth Transfer. I'm Terry Saka, the Chief Strategist. Now, you may or may not have seen that this week the Dow Jones has been down 1,400 points. But it's more to it than that. I don't really watch any mainstream television, so I'm not exactly sure how they're trying to spin it. But folks, this is pretty serious stuff as far as stock market goes. And we're going to show comparisons to not just the 2008, but the 1929 market crash to today. It's an extraordinary view in chart formation. That doesn't mean that it's going to follow that, of course, but I got to tell you, when you see these three comparisons from the Great Depression, which I also call the Great Depression in 2008, if it wasn't for the massive multi-mega trillion-dollar, multi-trillion-dollar stimulus, we would have had a serious depression in 2008. But when you see these chart patterns, you will know that we are right there on the precipice. Now, the stock market is down some 15% from the high. The institutions, and we did document this, but the institutions or the money managers have been selling. They're selling into the retail investor. I don't get it for the life of me why the retail investor, which is you, mom and pop and us, why is it that we are just blocking our heads and banging our heads on the wall to get the last bit of some rally that they think is happening? A.G. Edwards trained me back in the day that this is the time when the professionals sell into the emotional crowd, and the emotional crowd usually stays until the very end. Now, the market is down 15% from the high. Since the election, it was only up 40%. So you really have only materialized about 25% since the election, and yet you're still chasing. A lot of people anyway, because we do hear the comments. They don't know what to do. Or if it's down 15%, well, we're going to just wait and see because maybe it'll bounce back up. Wait until you see these charts. So let's go right get in it. This is the 1929 chart, and we all know what happened in the Great Depression. Now, this is the S&P 500 index 1929 crash. And if you notice along the left, it's just cruising along. And then the first sell-off is down about 10%. And then it ricochets, we call that in the industry a dead cat bounce. It ricochets up, if you notice, 7.5%. And then a staggering 40% drop from there. That's the crash. Now, this, of course, is from 9/16/1929 to 10/10/1929. Only 18 days, folks, that took place. So over a 7-day period, the low was then tested and failed, and that was the Great Depression crash. Now, take a look at this. This is the 1987 crash. If you see on the left, we're really booming, moving along. The first sell-off takes place, yes, again, 7 and 8% on the first sell-off. And then it ricocheted, dead cat bounce back up, 6%. From there, it failed in a staggering 60%. Was that 60%? Really? Unbelievable. But then it dropped again another 30% from there. So it was an unbelievable market crash in 1987, and yet it followed the exact same pattern from the top as it did in the Great Depression. So when the markets felt like they were topping out, we had the big sell-off, which we already have had, and then it rebounds, which we call the dead cat bounce, and then it continues. Now get ready for this. This is the 2018 right now, folks, and look at this chart. That's right. As you can see all the way from the left in the S&P, we go all the way up, and then we have our first correction. Now, this correction, unlike the Great Depression in 1987, this correction, the first one, came down 10%. Then a dead cat bounced up 8%. And right now, today, we are back down to the 10% level. This just happened overnight. We are already back down. Now, that 10% drop off the high, folks, that is what we're looking for. If it breaks, if the S&P breaks that 2580 level, which, by the way, it's right there come last Friday, it was there at 2588. We may have some volatility. We may have some testing here. If we break through that support, we will see a staggering 40% easy drop in the stock market. And if you think you're getting out, you won't. And if you're still all in the stock market, you may want to really heed the warnings of history. Because right now the market's already down near 15%. And if it drops another 40, that's 55%. Do you have another 8 to 10 years to just get to break even? Because keep in mind, we just passed a Congress, just passed an omnibus bill, which is unbelievable. Obviously, Republicans are no good in Congress. I'm not talking the conservatives, I'm talking the rhinos. They joined with Democrats. They forced President Trump to sign this bill, this omnibus bill, which is basically a spending bill. Because if he wanted the military to be funded, he had to approve it. I know conservatives are pretty angry at him. They were supposed to shut this down, this type of spending. But folks, the president didn't have a choice. Yes, he could have vetoed it. But right now, with China nipping at the heels, we need the money for our military. We need to correct the wrongs and clean up the military. He had no choice. It's the Republicans in Congress and Senate that should be downright ashamed of themselves, and I really hope a lot of them get replaced in this year's primary and election. But they added $1 trillion to the debt. $1 trillion in this bill, folks. $1 trillion at a time when we're seeing patterns in the market of expansive fiat money printing, credit margin, hedged credit margin moves. So I can't say enough about how eerie it is to see that the 2018 market pattern, chart pattern, is identical to 1987 and identical to the Great Depression. And what's interesting more than anything else, and if you want to get really technical with some fun, is if you look at the Great Depression chart, and then you look at 1987, the first sell-off was only in the 7% range. 2018, right now, the first sell-off was 10%. I say that the big sell-off will bring this market down to a staggering number, and you're going to be surprised where it goes. We have a lot more to detail, but before I do, I just want to encourage, if you're still in the stock market, these three charts don't lie. They just don't. Maybe I'll even tweet these charts out. So if you're not on Twitter, I would say go get a Twitter account because it's a good way to put out bullets of information. Get these three charts. If your broker wants to debate it, get his answer on this one. Because folks, if they're wrong, you're losing another 50%. And do you have time to recover this time? I wouldn't want to take that chance. So I have to take a quick break, get educated, and now's the time to go into commodities. Now's the time to get ready for the money to flow out of equities to commodities, and silver would be a dynamic place. So let's take a quick break. We'll be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So I really like the idea right now. I know last week we showed, or at least played an audio clip of Larry Kudlow, who is now the economic advisor for President Trump. He's a wonderful man. He really is. He's honest. And on his radio program, he and his Wall Street guys were talking about, no kidding, talking about silver. There's something about silver in the commodity sector because it has been so taken to the woodshed through the manipulation. It's a gift, folks, because you can take a nice chunk of diversified part of your portfolio, put it into a precious metals IRA, into silver physical, and be able to ride that wave up to the high, which would be almost 180%. Far more than anything you've ever made in the stock market, and preserving your buying power. I just like it because the timing just happens to be right. But here, when we added $1 trillion more in this spending bill to our deficit, check this out. Our U.S. gross national debt spiked $1.2 trillion in just 6 months. If you've noticed, back in 2013 to 14, we hit the debt ceiling. Then in 2015-16, we hit the debt ceiling. They extended it again. We hit the debt ceiling. They extended it again, and now we are $21 trillion in the hole. The reason this is so important to understand, most people, so what? We just go into debt, and we go into debt for a long time. Okay, I get that, but there's a reckoning because the world is ready to take the dollar down, mainly the Chinese and the Russians, and now that the Chinese just instituted out of Shanghai the petro yuan, backed by gold, don't think that's rattling the dollar's dominance. So be very cautious being all in the paper world. Now, why is debt important? Or in our Keynesian economic model. Now remember, Keynesian won the argument to convert our financial system into his economic model versus the Austrian economics, which Austrian would be more godlike. Austrian was about saving. Austrian was about producing and saving. Keynesian was about debt, deficit, debt, interest, slave. You become a slave. Now think about that biblically. He's a socialist Keynesian. And so it was designed that if you do not continue to add debt, your system will collapse. And the reason it is, well, how you define the debt is through credit. Now, here's an image that's just about debt securities, loans, liability level. Now, we all know that we've shot straight up pretty much since 1980, and most people really don't care, and I understand, but we're talking 60 trillion in debt. 60 trillion, mind you. You notice it went straight up unimpeded until the 2008 depression, I mean Great Recession, as they like to say. And they notice the little hiccup there in the line. That hiccup in the line is credit. Credit contracted. Now, I contend that this next one, if you notice to the right, then credit expanded enormously straight up. And I have a feeling credit's going to contract again over this one because I think this market crash is going to be infinitely worse than what 2008 was. As a matter of fact, I contend it's going to be something we've never seen and probably will never see again. So I want to show another dynamic here, because if it's about credit, most of us live with the credit. We understand. We need credit for the houses. We need credit to expand businesses, cars. Plus, we have all the credit cards. We have the student loan debts and so forth. Credit is how our economy functions. Unfortunately, we've been living outside our means. Nobody wants to hear that. And it's okay, I guess, as long as it just kind of keeps going. But the problem is the Chinese, with Emperor Xi now in place to rule for 20, 25 years until he dies, he is flexing his muscle. He's flexing his muscle with military. He's expanding his military at a faster rate than we did in World War II. And he's ready to go to war and defend the Taiwan Straits. And of course, he's backed with Russia. And we do a lot here at Wealth Transfer to outline that Silk Road and China's takedown of the dollar's dominance. Most Americans don't want to have it. They don't want to think about it. It's just too complicated and too macro. But ladies and gentlemen, that's not too macro, that is micro. Because when the dollar's day is numbered, when they de-dollarize the world from the dollar, when we have expanded debts in the tune of tens and tens of trillions, we are more in debt now than any nation has ever been in history. It can't go on forever. The Chinese are setting it up to take over the world. We believe we have hegemony. We believe we are singular power. That's why we keep pushing Russia's buttons. And Putin's just saying, hey, why don't we get along? We can't allow that. And our deep state, as you see, don't want it. Deep state is behind the takedown of Trump. The deep state is behind the whole gun confiscation. And it's so embarrassing that they're using kids to push a gun agenda. It's so embarrassing. I won't even get into a rant on why the whole gun control thing is a farce. But I will say this, to all of you gun control teenagers, I won't even say what I really think of them. 9 teenagers die every single day by texting and driving. So if your agenda really is to save the kids, it doesn't even compare. Gun violence to schools and teenagers compared to 9 dying every day texting and driving. I would say if it really was about saving teenage lives, shouldn't we be focusing on taking cell phones and cars away? There's more to it, folks. Any time in history they go after guns, it's the communists and the socialists, the Nazis, Hitler, Mao, Stalin, Lenin, and then what do? That's right, persecute, destroy, rape, and maim. You cannot go there, and these kids are just completely ignorant. It's unfortunate. But our society is under a crack. We are at the stages no different than Rome when you look at the building of an empire. Our market system, our money system is stretched out to the max. We're starting to see the stock market in its volatile nature. Now, a good friend of mine who's a stock trader said, I think we're in an era of volatility. Okay, I'm with you. An era of volatility. Volatility, though, one thing. We're down 15%, maybe we come back up. But folks, we are this close from it breaching that support in the S&P of those charts I showed you. And if it breaches that support, we will see a cascading of algorithms and computers selling at the fastest rate. And before you can get out of the stock market and into something tangible that can protect you, it may be too late. Although this is going to go up 180% cycle to the high, you're going to have lost a lot of that in the market, and you're going to have to do something like silver if you plan to recoup anytime soon. So we do have to take a quick break, and then we'll jump right in, because wait till you see the next chart. Be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. Now, Cornerstone did tell me to let you know that they do have operators standing by. Folks, the markets are off 15% from the high. I would be really cautious. If anything, get diversified. This is a volatile time that overnight you will see this down and your portfolio down so substantially, you should be starting to diversify out of equities into the commodities sector, and physical silver being the most liquid and undervalued, as you heard from Larry Kudlow last week. It's a phenomenal place to be. So check this out. This is true money supply. So if the credit contraction is what causes the Great Depression, I mean recession, as they say, then look at our money supply. This chart details all the way back into the 80s, and it's kind of a curve to show you when money's expanded and contracted, and every time it's contracted, just after was a Great Recession. And if you notice where we are right now, this is going to be a credit crisis of epic proportion. On the right side there at the bottom, we are walking right into a massive credit contraction. We've already added $1 trillion to our national debt. Wait until you see what happens. So what we do know is if we breach in the S&P the 2880-ish range, this is what we're looking at. The next stage, right now we're at 23,000 and change on the Dow. The next level, folks, will be 19,000 below. That's another 20% from here, adding 35% loss from the high. Is that when you're going to decide to diversify? See, this is the time, as we were trained at A.G. Edwards back in the day. The professionals and the institutions are selling into the retail. This is the time to get out and diversify, not go in. Just heed the warnings of history, that's all I could say. Because after 19,000, it keeps going. And that's just the beginning of it. Now, another thing that I want to at least outline is why Larry Kudlow and his friends brought it up. Is silver just so happens to be, well, as they said, taken to the woodshed. And silver is so oversold and manipulated through derivatives, we have an epic gold to silver ratio of 81, meaning it takes 81 ounces of physical silver to buy 1 ounce of gold. Now, historically, all through history, silver was always about 16 to 1. My colleagues in mining and that side of the industry say before this is over, we will have a 10 to 1 ratio. What does that mean? I don't know. I mean, gold doesn't even have to go up, but silver will. And right now, currently, gold at 130 puts silver at 1,300. It puts silver at 130 an ounce. But look at this chart. This is extraordinary. When you see the silver price has soared after the gold and silver ratio reverses from 80, and right now, folks, it's 81 on the index. So if you notice on the far right, every peak in the green, going through all the way back to 1997, every time the silver-gold ratio hit 80, it collapsed down to 50, as far as 30 back in, what was that? That was the 20,000 in 2011. Now in 2011, when silver gold was at 30, the ratio, silver had hit $49 an ounce. And folks, from here, that's 180% return. We are right there at 80 again. You want to talk about wealth transfer, you can't get any clearer than some of this data. Now, another way of kind of looking at it is watch out above for the silver prices. Now, silver is our constitutional money. Article 1, Section 8, grains of silver. Silver is our biblical money. We should have always held physical silver. Physical silver was about maintaining honest weights and measures. You remember what we said, I think, a couple weeks ago, just from the 70s, 250,000 saved is worth 250,000 in currency today. Yet it doesn't buy you a fraction of it, does it, of goods and service. Yeah, 250,000 in the 70s to today's price of silver, $4 million. That's wealth transfer. Now, they don't want us to understand this. And it's not about just silver as an investment. It's about our constitutional money and biblical money, Haggai 2:8, the silver's mine. If we stayed in the kingdom honest weights and measures, and we didn't fall trap to the system's paper and dishonest weight and measure, we, the kingdom, would be so infinitely wealthier today. We would be able to control the narrative, and we probably wouldn't see this socialist overthrow we're seeing take place in the deep state. Now, we all think the economy is getting better, right? Or so they're telling us. Now, some of us are doing well. Some small businesses are definitely seeing expansion. But look at this, and you can't make this up. U.S. GDP from 2000 until today. Look at that real GDP down 8% since 2006. So why do we think we're doing better? Well, when you're comparing to such a low expectation, they can spin the narrative to make you think it's okay. But the fact remains, folks, we are still so down. And this is from Shadow Stats, and they're telling you the truth. We are so down in our real gross domestic product, our ability to produce as a nation, not even close to where we were in the early 2000s. So I just know we are right there. The corrections have been in place. We are starting the momentum down. I suppose it could turn around, but in lieu of trade wars with China, muscle flexing in the Taiwan Straits, and Russia getting sanctioned and pushing buttons towards a silver ruble, I'd say now's the time to get diversified. I highly recommend becoming educated. Get your IRAs and your cash portions diversified into physical, tangible assets, folks, because now's the time. Later, you're going to have to ask, what should I do? So God bless each and every one of you. We'll catch you next week.